Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to give you the latest updates on the Iran war. It's been a crazy news day, crazy market action. At one point, the Dow Jones Industrial Average was up about 1,100 points on the hopes of a peace or a ceasefire. We've seen a lot of those gains paired back down to about up 650, only about 1.5% gain at this juncture. So, whipsaw action in U.S. equities. Gold, the washout in gold was the big story. Remember that trade idea that we put out last Friday? I'm going to go ahead and show you exactly what happened. It could have been a great scalp, but at the position trade did not work. That was an absolutely unbelievable washout that happened during a period of low liquidity on yesterday's open. We're going to break that down for you as well. We're going to look at the VIX, the volatility index, talk a little bit about where our current risk profile stands, and of course, crude oil. Crude oil now printing sub 90, off almost 9%, and it's all on the back of the war news. The Nikkei bounced off a huge level. Also, corn's in an interesting position, maybe a bid. And the U.S. 100 just sort of whipsawing around, fooling traders into going long and then whipsawing them out at the beginning of the day. I mean, it's really a difficult time to be in the market. So I want to welcome everybody back. I think that if we haven't learned anything by the last month or so, the war is kind of a big deal. Kind of a big deal to the markets. There's no question about it. So I've got a lot going on here. Good to see everybody back in the room. Tina Jing, good to see you. Tina, welcome. I'm confident you're having a nice time on your travels, so travel safe, as I always say. I'll be hitting the road here relatively soon myself in early April. So good time to be out there, I guess. Trying time, but definitely a good time. Well, everybody over in the How to Trade community, good to see you. Andrea Garwal, always a pleasure. Andrea Tuku, Ralph H., Bobby Bob, good to see everybody back and ready to go for another week 13. It could be week 14, depends on which calendar you're using. But for me, I'm going to go with week 13, trading week 13. You always count the one after, sort of after New Year's as being your first one. So in any case, Bobby Bob, got a question. Hi, Coach. How was your weekend? How far can oil bearish and stock, and can I hold long? Well, my weekend was pretty good. The sun actually finally came out here in Montana, so I got out and got a sunburn. I was pretty happy about that. It's been a while. My vitamin D stores are way down, so I always like to get out and get outside when I can. It feels like we've been cooped up forever in this office, so I'm one of those people that gets completely away from the computers and the televisions and all of it on the weekends. But it was good. It was good, Bobby. I sure appreciate that. I'm confident everybody had a good weekend themselves. A lot of basketball going on. You might be wagering on basketball here if you're in the United States. And that was fun. Did a little bit of that as well. Let me see. How far can I hold oil bearish, or how far can oil bearish go in stock? I mean, I got to tell you, the oil market is craziness. We really saw the volatility, not just on the way up, but also on the way down. And really, it's all predicated upon the risk appetite of the market. So let's go ahead and start with the VIX, the volatility index, and we'll get right out to crude oil. We got to cover that gold, too. I got to break down that trade because we don't run from the trade ideas that don't work. Not on this live stream. We dive right into it. We learn as much as we possibly can. That's for sure. Tina Shing, it's sunny here too. Right on. We'll get out the sunglasses and maybe some sunscreen, maybe some tanning oil, get a nice base as we roll into the late spring months. One of the real nice times of year because it's not so hot yet, but the sun is out and it's good. If we could just get the wind to stop here in Montana, that would be great. But okay, volatility index, the VIX, you can see we've been referencing this chart almost religiously since the war started. We are now into week 4 of the Iran-Israel-U.S. war. They call it a conflict, an incursion. I call it a war just because when you're dropping bombs, it's a war. Don't really care much about the rest of the definitions. When you're bombing each other, it is a war. And this was a large-scale operation that's been carried out in the Middle East. They said it's 2 to 3 times already from the U.S. side, 2 to 3 times the size of the shock and awe campaign that was executed back after 9/11, right around 2005 or so. In Iraq. So this is an absolutely huge campaign. The amount of munitions that's been used is staggering. We're going to take a look at our poly market odds as well. But right now we are truly at an inflection point in this conflict or war. We are at an inflection point. And what that means is there's a chance that this thing can unwind this week. There's a chance of it. We're starting to see signs that maybe that the forever war and all the things that we've been hearing may not actually come to fruition, and something may be figured out here in the next several days. Now, I'm going to show you why that's the case, but really our risk premium in the market right now is clearly defined by our VIX, which is right around 25, 26. So the VIX, the volatility index, remember that is priced according to those deferred month S&P 500 options premiums. So as those premiums on those option contracts jump around, you see a higher VIX. That suggests volatility and that we're heading into an unknown period. Usually when you see the VIX way up, you see stocks down. That's why it's called Wall Street's fear gauge. Well, today you've got an interesting type of a dynamic here in the VIX because it's down about 3%, but I'm not really ready to throw the end of war party just yet. I think there's a lot of work left to be done, and there has to be a formidable agreement that really says that you're going to have some sort of lasting peace in the region. Now, the VIX is sort of showing us basically that earlier in this incursion, that's when it was really dicey. 35, we were up over that elevated 30 level, and you can see we've sold right back down to almost a doji formation. And always remember, when you see a doji on your charts, I don't care what time frame it is, it means that buyers and sellers are balanced and that uncertainty rules. Nobody really knows which way the market's going. It's all about uncertainty. So right now, when I look at the VIX, I say, okay, I mean, it's elevated. Our long-term average, our LTA is about 21, and we're printing 25, about 26. So that means that, yeah, we are in a little bit of an elevated risk environment. However, it's not dire, and you're not in a panic situation just yet. Even though when we look at price action, it can certainly feel that way. It can certainly feel that way, especially when we're trading gold, which was what we got to talk about. Let's talk about gold here, then we'll get into oil. Remember, if you want to trade oil or really anything else, head on over to Switch Markets, open up your account, get your demo account. MT5 is the platform of choice, but MT4 is also a featured platform as well. All sorts of bonuses. Right now, I believe there's a 5,000 credit bonus, and then also a deposit 50 to get a 50 free trade. Be sure to check those out. Depending on where you're at, in your experience level and if you're a new client or not, those bonuses are going to be a little bit different. So you're going to want to go ahead and check those out as soon as you get a chance. The biggest story that we've seen in the past several days has been bullion. And this is one of those trades that it didn't make me angry, but it definitely frustrated me. This gold market, we saw that a nice big sell-off there. And we were in a situation where this sweep lower was too big to hold. You know, usually we're in these trades and we try to get out of them early when we know we're wrong. This one, we got a nice bounce off of our entry point, but it didn't quite fill us up. We were looking for more. We were looking for about a $40, $50 move. And that was not unreasonable given our ADR is so massive, 176. Our 13-period ADR, average directional range or average daily range. I call it daily range because I'm old school. That's what the indicator is actually called on TradingView. But what this ADR suggests down here is how big of a range you're going to have for a given period in time. I use a 13-period average that sort of gives me my histogram value. So going into today's session, our ADR was reading right around 150. So that means from your low of your session to your high of your session, you're probably looking at about $150. That is a huge, and I mean a huge ADR. It doesn't get any bigger than that. It really doesn't, especially when you're talking about something like gold. Well, today's ADR is a little bit bigger, 176, but that's going to be one that we're looking at for tomorrow. Right now, today's range is absolutely astounding. It's 45. We went from a high of 45.36 down to a low of 4,098. So what is that, a $440 range, roughly? That was unbelievable, absolutely unbelievable. This washout, this area right here, starting to prove stubborn now, but initially didn't put up much of a fight at all. So let's get out to our trade idea, and I'll sort of walk you through this. And this is a loser. Depends on how you executed it, but this, for what I was looking to do, was an absolute loser. That is why I don't care how sure you are. And I talked this one up big on Friday. I was relatively certain that 38% was going to be money in the bank, and it was, but it just wasn't what we were looking for. So it's a losing trade. No matter how confident you are, no matter how strong a setup looks, 1 to 3% on any given trade. Risk management, even if you had to go 5 to 7%, you do it. But you stay structured with your risk. You don't get into this situation right here, get caught up in the bearish break and just start buying like a madman down in here, thinking that the market's going to bounce. Now, did it work? Yes. If you would have scaled into this move, yeah, you'd probably be way ahead money right now. But that's inherently risky because sooner or later the trend will not come back. So we're going to go ahead and break this down in real short time frames and look at how that price action unfolded. Let's see. Yeah, Jason Max, good to see you, Jason. Welcome. Joshua, hello, Joshua. You guys have any questions at all on markets you'd like to look at? Today's a great day to do that, although we do have a full market lineup. All right, let's get on to gold. So right now, gold's off about 2.7%. You can see we were looking at about that 44.35 level, which realistically was going to be our entry point right around this red level. So let's go ahead and just put 44.35 up on the chart here. And I'm going to go ahead and make it our entry and dial it in so we can see exactly what happened. But big picture, you know, Was this what we were looking for? No, not really. Right above our 38% retracement, which was, I guess I could show you exactly what the level was. This is a monthly. This is a big one. This really challenges your long-term uptrend. And you can see as of month, clearly there's a market driver out there that's dictating everything. Clearly that's the Iran war. So for whatever reason, a lot of traders are taking their ball and going home. They're selling metals. Right now they're selling crude oil. I believe crypto was in trouble earlier. Crypto's up a little bit, struggled a little bit over the last couple of weeks though. So it's really difficult to sort of put your finger on where the money's going. And that is a real challenge for traders. If you don't know why something's taking place, typically it means there's a ton of smart money behind it, and we're just not privy to the information. And in the Iran situation, there's no question about it. There is so much information out there, and a lot of it's just flat out wrong. A lot of it's lies, misinformation. So when you're dealing with the fog of war type situation, this type of chart is really what you get. You get the unknown. What are we doing? Well, we had bidders up here. At that juncture, we really believed we were going to new all-time highs. It didn't happen. Big sell-off. 16% sell-off. That's the largest sustained sell-off in gold in a very, very, very long time, probably ever. Maybe back there was an 11-point loss back in September of 2011. But this is no kidding. I mean, this is something that's really, truly historic for the gold market. So we pulled off right to that monthly 50%, which I guess would have been a better buy. But are we still trending? Well, we're right at that 38% level. We've come back to it within about $35, which is still a lot. But you can see as long as we're above 62%, technically, the uptrend is valid. So we're above 62. Okay, technically it's valid. We're also above the 13-month EMA. They're at 39.90. So interesting stuff developing right here. We're still very bullish, but not as bullish as we were. You have to be smart and say, man, this is an incredible wipeout. That candle right there forced a lot of retail traders out, probably broke a lot of accounts. But what else did a sell-off like that really do? It brought a lot of profit taking into the equation. Because if you're a gold buyer from maybe down not too long ago, back in 2024, maybe you bought down around 2000, and you see the crescendo up there at 5,600, really difficult to start giving back huge chunks of equity when you say, well, where should we get out at? Well, looks like maybe the winds of change have blown into town. Maybe it's time to take the profits. And we saw a lot of that, a lot of profit taking. Now the market's sort of gathering its breath and getting ready potentially either to reestablish itself up and make the journey back to 5,000 or completely sell off in the coming months. As of right now, I do not know. But I do know that we're digging in right around 4,400. I'm tempted to maybe go long again, but let's go ahead and break down exactly what happened at our level. So take it down to a 30-minute chart. What do you got? Well, you sort of had a little bit of compression there on the 19th of March, and then we reopened the market, the 20th right there, and then what happened? The 22nd. We really got hit in a very, very, it's unfortunate. The timing was really unfortunate, but that's life. Right in here, sort of, I would say on yesterday's Tokyo Open, so right around the open of trade in Asia for the week, you can see what happened. So we had a nice sort of, there's your true electronic open, then we sold off, and then there's the Asia Open right there. We tested the level, and we only got a little bit of a bounce, and it just did not function well. This was one of those trades where I go, wow, there's so much selling. Why do you think there was so much selling right in there? It's anyone's guess, really. That was before the headlines that a deal potentially had been made. We're going to cover that in a minute. But this area right in here, it's not necessarily that there was a tremendous number of sellers. It's just that the market was very thin. It was very thin because essentially you were trading during an off hour. Yes, Tokyo brings some participation in the market, but to open the week, there just wasn't anything here to really balance the action. And you got one-sided, and that is a major sweep. In that first 30 minutes, you're down to about 43.19. It would have been really difficult to hold that trade through that type of action. So let's take this right down to maybe a 1-minute chart. Let me go ahead and spot this. Let's see exactly what happened when our level was hit. I always like to do this because it helps us learn. You learn from losing. And unfortunately, you don't want to lose too much, that's for sure. But what you've got to do is you've got to say, okay, I've got to learn exactly what happened. So if I made a mistake, we don't make it again. So what's happening here? It's a tremendous situation. Tremendous volatility. This is a 1 minute chart, and your 1 minute range is going from 44.41 to 44.25. That's a $16 range on a 1 minute chart. That's astounding. In any case, right here was our entry point, so we did get hit right around 35 right there, and then you got an immediate bounce up to about 44, so that was good for $9, but we were looking for a little more. So the next leg down, we hit the 38% retracement exactly. Still, though, we were long from here, so you only got a maximum move right there at about 44.53, which was about $18. Now, that's a healthy move. That really is a healthy move. We were looking for a little bit more. We were looking for something right up in here. We wanted to see if we could get in potentially and grab a little bit of profit taking at a much larger level. I believe that's what we were shooting for. 44.78 was going to be our top side target. So it was a much bigger trade than initially. Than it probably should have put on. So this right here, in my view, if I'm going through my trade performance and I'm breaking down how this thing unfolded, I'm pretty disappointed with myself. I would be pretty disappointed. This would be one that I would take myself to the woodshed over. I'd say, you know where the level of success for your own personal skill set lies, and that is in scalping. Now, as a position trader, I'm going to show you potentially a position that's setting up for it in a way that we can take a long position here. But as far as trading horizontal support and resistance levels and taking an initial position, why? What was the answer? Was it greed? No, I don't think it was greed. I think there was that much in the market. So then what was the problem? The problem probably was the timing. Do you take this trade and try to hold a position during an off hour ahead of the London weekly open? You can't really do that. I mean, I know I'm getting into the tall grass here. Can't really do that so much because the real action hasn't even arrived. The players haven't even got off the bus yet. And then the London session kicks up, and let's take a look at what happened there. Well, I mean, this isn't even London. This is just shortly after the Tokyo Open, but you can start to see what happens. Good teachable moment here. Like I said, you lean into losers. You don't don't get fixated on your losers, but you've really got to understand that when you lose money, it's not necessarily the end of the world as long as you're using your risk management. But to lose money and not learn anything from it's a disgrace. It really is. So what's starting to happen here? Now, I'm on mountain time, so my time zones are essentially what? 1 a.m. is going to be when the London Open is. I'm about, 7 hours back, something like that? There you go. What happens? The cavalry shows up. Dun, 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 dun. There's the bidders. The timing of that trade was terrible. Terrible timing. So if I'm going through my journal and I'm taking a good look at my trade location, I still like my trade location, number one. Number two, what about the timing of it? Did the timing element of it make it risky? Yes, it did. If you wait maybe until the London Open or the U.S. Open, you probably make a lot of money on that trade. It just didn't unfold very well. So if I'm chalking that up, looking at my own performance, I'm not happy with that at all. Not happy with that at all. That would be one of those that instead of being maybe a 3% trade, the tall into my risk management portfolio, that should have been a 1 or 2%er just because the timing wasn't perfect, and it really wasn't. So that's a decent teachable moment. Now, what can we do from here on gold? Well, looking forward, you can see sort of what's developing on this daily. This is pretty good stuff. So there's two ways we can look at this. We could be bearish or bullish. For me, the line in the sand is that 38% retracement right there at 44.25. If we close above 44.25, I would say you're probably going to take an accumulation trade. This potentially could close up here either slightly in the red or maybe even in the green, and that's going to be a hammer. And if you get a daily hammer formation that closes right above that level, I mean, it's probably your accumulation swing trade maybe for the rest of the week. Very, very big situation. Now, on the other hand, I could play devil's advocate and say, okay, well, what about trends? Why are you looking to get long? And I go, I'm not looking to get long just yet. We've got to see the proper setup, but you could also say, why not just sell this thing later in the day and maybe make a little bit of money? And I understand that too. 38% on the dailies right there, 44.63. You've also got that key level at 44.25 that you might be able to build shorts off of. So 6 of one, half a dozen of the other. The biggest thing I always tell traders is stay fluid in your thinking. Just because we were wrong on the first attempt, and it wasn't, we still got $18 bump, which wasn't bad, but it wasn't what we wanted. It wasn't what I wanted. And looking back on it, probably should have just taken the standard, 150 ticks or 250 ticks and just moved on down the line. That would have been the play. But right now, we're going to go ahead and maybe move forward and see what happens later in the week. For me, right, it's very, very simple. It's all about this 44.25 level. If you close above it today, and we're right around 4,400 now, could have a pretty good opportunity maybe to take a long later in the week. But if you wanted to sell and get with the pressure right now, you got a couple of entries. You got a couple of late days entries to take short scalps from right around 44.25, probably relatively strong. And then you've also got a situation up here at the daily 38% at 44.63. Something to think about there, that's for sure. But definitely a big washout in metals, and it's just been, you're getting bid back right now. At least silver's getting bid back right up to 70, but we're in a tenuous situation right now, especially with the metals market, no question about it. Let me see. Tina Jing, there was a huge spike at 11 a.m. UK time, 7 a.m. New York time on literally a no news impact day. It all turns out it was the call between the UK and Trump and someone. I was in a trade of the Euro USD. Yes, we'll take a look at it in a minute. Kirsty, good to see you. Kirsty, welcome. If you're new to the stream and you have any questions, feel free to weigh in. It's an interactive trading experience. Couple of rules. If it makes money, it's the right answer. If I don't know, I won't BS you. And the other thing is ask questions. It's a heck of a lot cheaper than losing money, that's for sure. All right, so the news of the day, Tina. Let's just sort of talk a little bit about what has happened for the volatility, and then we'll go ahead and look at the Euro USD. The volatility in this one was epic. Today's session has been a no news day, but a huge news day. There was no economic events, and you can see what we've got going on right now. We've got clearly differing opinions, differing viewpoints, and a cloud of disinformation from about every media outlet out there. So let's go ahead and take a look. It's not that it's disinformation or that somebody's inherently lying to you. It's that they're not complete reports. Some people are weighing in here, some people are weighing in there, and they're not really telling us what's going on in total, and that's because the powers that be aren't being straight really with anybody right now. And the Trump administration is very good at that. They're very good at not really giving you a clue of what's going on. So here we go. This is the news. Trump says the U.S. and Iran both want to make a deal and says they'll talk today. So the U.S. said the countries had productive talks, but the Speaker of Iran Parliament calls it fake news to manipulate whatever. You can see Trump says U.S. and Iran had good talks. Middle East crisis. Trump says both Iran and U.S. want to make a deal. Trump says military will postpone strikes on Iranian infrastructure. And that was after giving a 48-hour ultimatum over the weekend. So much is going on in this news cycle that I don't really know that we can do it justice. I don't know that anybody can. Nobody really knows what the heck's going on right now. But in any case, postponing attacks on nuclear power plants. Trump says Iran agreed not to have a nuclear weapon. That's pretty much news to everybody. And then you got the other side of it. Iran says it's not in negotiations with the U.S. and Trump backed down. Iran denies talks with the U.S. following Trump's remarks on productive conversations. So what really is our litmus test? How do we know? How do we really know what has happened? This is one of those situations where you look at the charts and show me the charts, I'll tell you the news type of a deal. And when I look at the charts today, our VIX chart, we started out with that, really shows that the monthly, there was a lot of fear. And now there's not so much fear. The markets are getting used to what's happening in the Middle East, believe it or not. However, today was an absolute roller coaster. So you got your US 30. We'll talk a little bit about this chart here in just a second. Let's get rid of all that nonsense. Let's go to a 30-minute chart. Okay. There's your 30-minute chart. What is that? 5 a.m. So that's going to be right around, actually with daylight savings time, Tina, it's going to be probably right around 11 a.m. UK time. So there you have it. There's your big spike of action, and that was when all this news that there was negotiations and that the war may be over really took over, dominated the markets. What's happened since then? Nothing. Now the markets are starting to wise up and say, you know what? Maybe that's not the case. So this is a situation where, from a risk management standpoint, I know I'm stuttering a lot today, but I don't really know what to say about any of it. We can sit here and look over the charts, and I can show you all the levels, and we can pull a system and strategy after strategy, and I can answer any questions that you really want to. But when it comes down to the basic question of what is happening in the Middle East right now, I cannot tell you. And I've talked to folks in Dubai. I've talked to folks in Israel. We watch the news. We watch all kinds of news, everything from podcasts and live streams to your formal the media outlets. You read the stuff out of the White House. You look at foreign news intelligence agencies, and you're going, somewhere the truth is there, but I don't know that anybody knows all of it, aside from the folks that are inside of the government on each side. So here's what we do know. I made a statement after this whole thing began. I went live in the middle of the night. And here I was live at like 3 or 4 in the morning, or 3 in the morning, something like that, as soon as the announcement was made that the United States was going to launch an operation on Iran. And I kept using the phrase, I don't have any safe conduct. There's no safe conduct. When you're trading in this market, there's no safe conduct. And what that means is somebody can say something and send the markets trending. And it can happen fast, but I really want to show you this US 30 because, number one, this is off hours. Okay, it's not even the US Open. You got 2.5 more hours until the US Open. Right there's opening bell, ding, ding. You can tell by the tick volume, right? So you've got this is the US Open. This was the big market mover, but look how fast it happened. You're up about 2.62% in 30 minutes, and I bet you it was even faster than that. I was sleeping, to be honest with you. So something like this. So here's your 1-minute chart, and there it is. So this stuff right here, there really isn't much of a way to predict when these things are going to happen. There just isn't. We can pull up Trump's schedule for today and tomorrow and the next day. I personally, he'll come out, he'll make a statement on the way to the helicopter or on the way to the airplane or talking with a foreign dignitary. There's no real way to figure out what he's going to say at any given point in time. And these types of announcements, it's death for a retail trader because it's so much volume flies into the market. But look at what's happened here. This is and this is tick volume. This isn't volume. This is just tick volume. But take a look at it. It stays elevated for about 5 minutes and then crashes. And then these levels come up and they're pretty much, akin to your highest level during this 1-minute sweep, yet price is done moving. So here's your initial move. That's what we call a sweep. That's a sweep. That means that everybody that came in was buying. Nobody's selling. Everybody's buying. And when you get a rush and they're a big block order or a sweep, that means the market is going to move. And it's going to move quickly, and it's not going to let you out. That type of thing is, it just is. It's destruction. Now look at what's happening on this 1 minute. Sort of ricocheting around. Now maybe we're going back up. Maybe Trump says something later in the day and sends the markets out on a high. It's really difficult to figure out what's going on in this environment. So if you find yourself losing money doing this stuff, maybe shut it down for a couple of weeks. Maybe take it easy. Maybe cut your risk for a couple of weeks until this war is priced out. We're starting to see in the VIX. Keep an eye on that VIX. If that VIX is down around 21, then I wouldn't worry about much. I really wouldn't. You're going to get a surprise announcement here and there. But if that fear index, that VIX, remember, that volatility index prices those deferred month options premiums. That means that you're looking ahead to what's going to happen in a couple of months. And then when those markets start calming down, then you can sort of breathe out a little bit. Now, right now, we're only at a 25 in the VIX, 26 in the VIX. You can't get worried about that. That is nothing to worry about. But when we start getting up here, 30, there you go. We went right to our long-term average. So what did we have right here? The day, 35. Why do you think we opened as high as we did today on the VIX? Because of the weekend ultimatum. The threat of an all-out energy war from the Trump administration brings everybody to their knees in the markets. They go, if you blow up the energy infrastructure in the Middle East, you're going to be offline for 20 years, 10 years, 5 years, whatever it may be. 10 years is what they say. But if you blow up everything, 20 years to get back to full production, what does that do to the global economy for a decade plus? Destroys it. Nobody wants that. Iran doesn't want that. The United States damn sure doesn't want that. And the rest of the world doesn't want that. So when you start hearing about ultimatums, you know you're going right up above 30 in your VIX. So your high right there is 31. We opened at 30. But since then, we pretty much crashed, went right down to our long-term average. It's not a mistake. Everybody knows where 21 is in the VIX. Boom, right there. And then you bounce back up to 26. Still elevated, not the crisis level that it was. It's a little bit better than earlier today. Still elevated, though. What does that tell you? Nobody knows what's going on. Nobody knows what's going on. And for me, it's not really frustrating. I've been through this. I haven't been through this in a long time, though. really a long time. So I'm falling back on new tools on how to manage expectations, and I'm also reducing my risk way down there in the markets. I mean, basically very little to no exposure. And the reason why is it doesn't really matter what you do. If the wrong thing hits the news wires, you're in trouble. So how do you combat that? Cut your leverage and use stop losses. Even if your stop loss is way off of the price action, put it down. And I don't like to do that either because sometimes the spreads go crazy and you get nailed, but it's better than holding the bag on that gold trade that went against you $500. It really is. That's for sure. Let me see, Marvel. Good to see you, Marvel. Welcome. Let me see. Diaspora, good to see you. Diaspora Ground Truth, good to see you. Naomi, good to see you, Naomi. Welcome. Let me see. Ralph H. over in the How to Trade community. The past 3 weeks has been a masterclass in geopolitical situation and how it affects trading. I couldn't agree more with you, Ralph. I had a meeting last Friday and I was talking with they were sort of traders, but they're professionals in the financial industry, and they asked me what I thought about it, and I said the potential for insider trading here is so great because, I mean, imagine if you knew what was going to happen over the weekend on a Friday in a war situation, just like Ralph said, geopolitical situation, how it impacts trading. There is no question about it. There's no question about it. All right, this is a serious live. Nah, we're all right. We're doing pretty well. I feel pretty good about it, but the gold market action should have got your attention. This news cycle, it's challenging at best. Okay, so one of the new tools that I've been using for the past several years is this poly market, and there's several of these event prediction platforms. I'm not shilling for poly market. I'm not telling you to open an account. If you do so at your own risk. That's your business. I don't have an account with poly market. I don't trade with them. But what I will say is I look at these odds because they were incredibly accurate in the last several elections, and they have been able to predict things sort of like it's not necessarily groupthink, but it's definitely sourcing sentiment directly from people that back their opinions with money. And that is really what I'm interested in. I'm not really interested in somebody that's sitting around telling me who's going to win the game and why, but they don't have any money on it. I want to hear the people that say, okay, I think that this is going to happen and we're going to put some cash on it, because you're backing your opinion with money. And I think that's very important because money is time, and it's a product of your efforts. It's something that we don't want to part with. So to me, a market like this is much more accurate than any kind of polling data you're ever going to get, because these folks, a lot of them know something, and that's all I'm going to say. Okay, so there's a couple of markets that we've been looking at. Iran ceasefire, June 30th. We're talking ceasefire right now with this deal, right? So you got about a 20% chance that happens this month, 18%. By April 15th, it's about a 50%, April 30th. So all of a sudden, we're starting to see maybe an end in sight to this thing. We're far from it, but still, there's an end in sight. Will the Iranian regime fall by March 31st? Nobody's believing that. Is Karg Island no longer under Iranian control by when? April 30th? This goes back to our boots on the ground invasion narrative we talked about Friday. We thought it was coming last weekend. Didn't happen. U.S. forces enter Iran by, this one's the one that I'm watching really closely. I think this represents the biggest escalation ladder. As far as the escalation ladder goes, you start lobbing missiles, and then now you're talking ground invasion. This will be the biggest escalation really left on the board, aside from maybe something we're not seeing as far as munitions on the Iranian side. Terror acts of terror, things like that. U.S. forces enter Iran by March 31st. That's way down. 14. April, 48%. December, still about 60%. So we're on the fence right now. As you can see by these odds, we are on the fence. We think, well, maybe they're going in on the ground. Yeah, they're still going to be in there by the end of this year. How about some of these targets? Karg Island. We talked a little bit about Karg Island on Friday. This is Iran's oil depot. This is where they refine. This is where they load the boats. They do all of it right there on Karg Island. So the United States was talking about potentially taking over Karg Island with ground forces. And you can see right here, only about a 25% chance of that. So maybe that's not a target. So what's the big dog? It's the Strait of Hormuz. That's it. Over the weekend, Strait of Hormuz traffic returns to normal by the end of April. This is what's determining everything in our markets right now. This is directly correlated to WTI crude oil and Brent crude. This is it. This is it right here. So you're talking about the Strait of Hormuz traffic returns to normal by the end of April. Only about a 35% chance. Down 15%. Interesting. Look at this. At one time on the 10th of March, what about a week, 8 days, they believed there was about an 80% chance. And now we've just gone down and down and down and down. Things are looking up. Things are looking up a little bit, maybe a peace deal, and you're right back down to where we were. There's so much out there with regards to information that is so difficult to figure out right now. It really is. We're going to go ahead and look at the oil markets next. Actually, let me start with U.S. oil. We'll look at both U.S. and U.K. oil, and these are the CFD products that are for Brent and WTI crude. And then we'll maybe do a little time price offering trade, see if there's a late-day TPO trade on oil futures. We might be able to get it, that's for sure. Let me see. Tina, yeah, definitely the learning environment we don't get every day. Yeah, that's absolutely right. I mean, this is, if you're a new trader, welcome. Number one, welcome. Great to see you. But you picked a heck of a time to get in, because these are things, when we looked at that big gold washout earlier, these are things that end accounts. They build careers and they end careers. And that's the market. I mean, it really, if you're on the right side of that gold short today, you could have walked away with $250,000. Normal people did it, but if you're on the wrong side of it, that's when it really hurts. So let's go ahead and talk a little bit about WTI crude. Linda, good to see you. Linda, welcome. Look at the NASDAQ, the NQ. Absolutely. I'll look at the NQ here in just a second. Rollover, though, if you are trading NASDAQ futures, remember those quarterlies rolled over. So you need to be looking at, I believe, what is it, the June? I guess you'd be looking at June NQ. We'll look at it in a second. All right, WTI crude oil. This is the U.S. oil CFD. We talked a lot about 100 being key. For the last 3 weeks, the fight has been in 100, and now we've broken south. So there's a lot of optimism in that crude oil market that, yeah, the Strait of Hormuz is going to open. So that's absolutely huge. If we get good rotation, though, back up off of this 50% level, 87 and a quarter, potentially we might rotate back up to 100. It can happen fast. It really can happen fast. So watch yourself if you're in there on the WTI markets. Andrea Garwal made a great point earlier today. She was looking at 62%. That's potentially a bid for me as well. I wouldn't hesitate at all. This long-term weekly chart, this is a good area right there, about $80, 79, 75, 79, 67. Pretty good downside support there. As far as your EMA, 13-week EMA is down there at 76. That would be a beautiful to get a shot at that. And then also, don't forget our gap area. A lot of folks, it seems like a lifetime ago I was telling you about that gap. Don't forget about that gap right around 68. My guess is if there is, in fact, a resolution to this war, Trump was saying it's going to be over in the next 5 days. I don't know what to believe anymore. But if that does happen, then watch that gap. We're probably going to be right back down around 70 by the end of April. Could happen a lot sooner than that. Anytime you're losing 9.5% in a session, yeah, that could be pretty good. So that's WTI. That's all I'm looking at right now. 100. Still, I don't believe we're done trading that. Maybe next week we'll rotate back up and trade it. It could happen this week. These levels I'm not too concerned about. 95 was big. That broke. We went to 50%. I'm not interested in it. 87.50 probably is catching some bids right now. This zone down in here, though, if we push maybe a leg lower, $80 is going to be big support. 79, 75, something like that. Not a bad way to be looking at it. UK oil, a little bit more challenging because of being the global benchmark for crude oil. There's been more volatility in Brent, even though WTI has been crazy as well. But this UK oil contract, 99.38 was a big zone. You can see we've challenged that several times. That gap area, I don't want anybody to forget about the gap in Brent crude either. You can see right down in there, right around $75. That could potentially be a big one. We're not there yet, but that might be incredibly tradable. Might be a target-rich environment for us. I'll let you know if we make a run. If we make a serious run down to that zone, I'll let you know, and then we'll get out in front of it, maybe some potential trade ideas. But as far as Brent goes, it's about 100. Now, we're trading at 100. It wasn't too long ago where we were at 110. What did we open at yesterday? The electronic open was at 114.43. So that's staggering. That's staggering volatility. We're putting in another epic range for today. Remember, it is the Monday session, so we're really only talking about 1 day's range, and there it is. I mean, it's absolutely huge. You're off 8.32%. All the way from 114 down to 96 is staggering. It's an $18 range in 1 day. I mean, that's huge volatility. Honestly, we've never seen really anything like it. And it all has to do with this war in the Strait of Hormuz and all the different things that are happening. This sell-off right down here took us to that 13-day EMA, which is right around 99. As difficult as we could make technical analysis from time to time. I talk to traders all day long, parabolic curves and ADRs and ATRs and crossover strategies and all sorts of different oscillators, MACDs, you name it. Folks ask about it and they trade it. As hard as all that is, sometimes it's just big round numbers. 100 is huge. If you get a close above 100 for UK oil today, you're probably going to remain in that really staunchly bullish category. But if you sell off a little bit, you can see we've got some key levels down here on these Fibonacci's. 93 is support. That would be the one I would be looking at right there, $87 for Brent crude. UK oil, absolutely huge. And it's one of those that I would be definitely looking at. Okay, we had a couple of questions. Tina, a little bit earlier, was talking about the Euro USD. We'll go Euro USD, Nikkei, NASDAQ, and then maybe close with the corn market, unless we have some other questions. Sort of a monthly chart here in the Euro USD. It's just ugly. Nice big break, nice bullish break here. And then we start going sideways, and it's just really, I can draw all sorts of trend lines and things. I could build a case that maybe the trend line reversal is now underway. I just don't believe it means anything. I really don't. I think that the war is dictating all of the market drivers of policy that we need. So for me, I would just fall back on my Fibonacci's, something like this. Spike low to a spike high. Support's right down there at 113.50. That's big. Our moving average held up pretty well this monthly. Our low today, a low for the month is going to be 114.11, and our moving average is right there at about 115, and we're back above 115. Really difficult to trade this type of action in the euro market. You see right there, that's what we're looking at today. Tight Friday, big time move. Thursday, tight Friday, huge Monday. Good luck to you. Good luck figuring it out right now. Just fall back on your technicals and watch your risk. That's what I would say. That would be the only advice that I would give out. Fall back on your technicals, watch your risk. Watch your risk, fall back on your technicals. As far as being a fundamental trader right now, unless you're sitting in these intelligence briefings and have inside information, good luck figuring it out. Still, though, juicy downside support there. If we get maybe a big sell-off or something, then I would be more interested in that. I'm not interested really in anything else here. Very choppy. I want to see more evidence. We need more evidence before jumping in to try to pick a direction in this market. That's my view on the Euro USD. Okay, let's go ahead and get out to our US 100 contract. This was one that we put out Friday. We talked a lot about this formation being a big deal. This is a weekly chart, US 100. What do you have? You had a weekly buy that came to fruition back on the 26th of May, and since then it's just really been an epic uptrend, and now we got that cross under. And there it is, bigger than life. There it is. And so that cross under, that purple candle, that 9 EMA crossed under the 20, that suggests that potentially you're in a short type of a situation. The trade really hasn't worked that great just yet. You saw that big negative open, then the big rebound back up to your moving averages, and now theoretically you're still a little bit in bearish territory. So for me, I look at that and I go, well, do I want to be long or short? The news cycle is going to tell the tale. But there's no arguing that sentiment has definitely shifted from this euphoric bidding seemingly on every pullback back to that. Take a good look at that 9 EMA. We talk about trading breakouts over the 9 EMA. Maybe you just buy the 9 EMA as support and sell it as resistance. That's something I do with the 13 EMA all the time. Look at that. That is just every pullback to the 9 EMA. Boom, 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 boom. Then you got to sell off a wash out there. Then you bounced right back up, and now we're on the bottom side of that. Now we're selling the 9 EMA, and it's working pretty well. So for me, I'm watching this closely. We did have that cross under, which I respect a lot, especially on a longer time frame. So potentially that means that there's a lot of folks out there that are probably holding shorts right now in the NQ. And a lot of that goes back to the energy problem. If energy comes offline, if you see an energy war develop, if the transformers, the energy infrastructure, the oil, the natural gas, all of it, if it gets taken offline from the Middle East and all of a sudden there's a global energy crunch, that's the end of your AI boom. At least temporarily, until you can get nuclear up and running in some facility, because we were talking about building these data centers with AI here in the United States and powering them with natural gas. If you don't have natural gas, or you need natural gas to do other things and they can't be dedicated to AI, what happens to AI? Well, if AI has to pull the reins in, what happens to the NASDAQ? The NASDAQ has to pull it in, and you can see it's just like a deck of cards or a house of cards or a stack of dominoes. So we're watching the dominoes fall right now, but the volatility is there. There's still bidders there. Let's go intraday. Let's pull an NQ chart. Intraday E-mini NASDAQ futures. I haven't completed rollover on these just yet. It's just Monday, but it looks like we are looking at June. Okay, so June, so 559,000 contracts today. Pretty good volume. Not bad at all. As far as what could you really do right now with regards to trading, I still am respecting the downside of this market, but it is an up day, but the pressure is definitely down. So let's go ahead and get intraday and take a look at maybe our time price offering chart and see if we can do a little bit of business. So right here, what do we have? We have that huge epic announcement that drove all of the markets crazy. If you knew ahead of time that that was going to be announced, you could have made a stack of money. That's why I think after all this is over, there's going to be the courtrooms full of people that are getting charged with insider trading. I don't see any way around it. But big rally. So right now, it's almost like a news day. It's almost like a CPI or an NFP day. Now we're trading sideways inside of that range. So for me, I'm always going to be sort of doing things like this when I see a big range established ahead of the U.S. session. There's your sweep higher. Since then, we've just sort of trickled around. What are we about? Probably 50% of that range, that bar's range, somewhere in there. Guarantee it. Yeah, right at 50%. That tells us that we don't know what to do. The market has not pushed higher. They don't really believe this initial bidding. It's pulled back down into that range, and we're waiting for the next news item. So if you're trading the NASDAQ intraday, number one, have your news on. Be watching the news. Number two, how could you approach this potentially as a scalper, late day scalper? You've got about, 2 hours and 15 minutes left in the U.S. session. What could you do as an intraday scalper? You could maybe look to scalp right up ahead of that high, that crazy bar high, maybe take a short right in there and look to get in and out. The NASDAQ is such a challenging market because it is so fast and these ranges are so big. Probably be looking for like 15, 20 ticks on that, more than likely on the futures contract. As far as the downside, where would you want to buy? You probably want to buy right down in there. Now, I don't recommend taking much of a risk at those levels. If you do get caught in a breakout, a big bullish breakout above this range, then you're in big trouble. Is today the day to be playing an orb strategy, an opening range breakout? Not a chance. You can see right here just how, if you're looking at your orb, 30-minute 2-bar orb, you're holding shorts, but because of this move, you can't be playing a breakout there, in my opinion. That's just my view, but, maybe you see it differently. Interesting chart. I don't think I would be in there trading it, doing anything with it, really. Play the extremes of that range. Those will probably treat you pretty well, but other than that, scary stuff. That's for sure. Hope that helps, Linda. Let me see. Marvel, my master. No, I'm nobody's master. Well, my master, I guess. I'm this cup of coffee's master. A good teacher to me. The few days I have been on his live section, I've learned a lot and saw more reasons to improve as a full-time trainer. Well, you're welcome, Marvel. You're too kind, though. You're too kind. Remember, your success in this market's always going to come from you. It will never come from me. It will always come from you. You will be the one taking the trades. You will be the one doing the analysis. You'll be the one asking the questions. And you'll be the one that brings the desire, the dedication, and the discipline every single session to make this career, make this venture a go. And just because 95% of the people in this world supposedly wash out as traders doesn't mean you have to. I don't believe that number for a minute. We've had a lot of traders that have gone through these programs, that have joined the live streams, that have asked questions over in the How to Trade community, that send me private messages and ask questions, that are still in the game. Some are doing well. So it can be done, but it's all going to be you. It's all on you. Absolutely, Linda. You're 100% welcome. Let me see. Atham, hi, guys. How's everybody? New name. Welcome to the room. I'm doing very well. Sounds like we got a positive room. Everybody's exclamation points, and somebody's happy. That's good. It's good. It's Monday. We're going to have a big week. Good week. Let me see. Naomi, facts. We do the best we can to be fact-based here. Be fact-based as always. You can't go wrong there. All right, I got a couple of currencies that we're going to look at the Nikkei very quickly, and then I'm going to close with the U.S. dollar, Japanese yen, and the Australian dollar, New Zealand dollar, and I think that we'll be up and running maybe with some trade ideas. We'll see. No trade idea today, though. You're going to get the newsletter. Remember the Switch Markets newsletter. Let me see if I can find a link for you. If you're not already subscribed, this one drops before tomorrow's, let's see. This one drops before tomorrow's London session. So if you're interested, be sure to click the link, sign up. You're going to get some trade ideas. We also put a video out, market analysis. That's going to be dropping. I'm not filming that one until later tonight. I want to see exactly how all this pans out. I hate making a video with a bunch of levels and then it just being worth nothing. if it's worth absolutely nothing by the time I'm done filming it because there's so much volatility, that makes me angry. I don't like that. So I won't film that one until a lot later tonight, until we see at least a daily close and maybe see the open and see how things are going. But check out the newsletter. A lot of analysis and good stuff in there. We're going to be talking a little bit about bonds and the mass exodus from the gold and silver markets. But, who knows? They're back. The bidders are there in the last several hours. Right now gold's banging 4,410. Back up above that key level. Not yet. 44.25 is huge for gold. Remember that one. Okay, let's go ahead and knock these markets out, and then we'll get going here. U.S. dollar, Japanese yen. Yeah, let's hop to it. That's when it all happened, right? That's when the announcements, you see it on every single chart. And I mean every single chart. So something to be said for that. As far as this intraday price action, just because I'm curious, let's go right from the top of that area. Pull back 38%, still bearish here. Still bearish on this yen, at least intraday. Take a good look, though. Really a good look at what you have. Very similar to what we just talked about on that US 100. Well, not that chart. I got the wrong chart there. In any case, we sort of outlined where this range of this news was. And look at what's happened down here in this dollar yen. The bidders have defended it 1, 2, 3 times. So the bottom of this thing, right around 158.25, there's going to be bidders there. So if you are holding shorts, that's going to be a big impediment that you're going to need to take out, at least as you roll into the daily Forex close. All right, enough of this intraday stuff. Let's take a look at the macro picture and see if we can find a level or somewhere to hang our hat going into the Tuesday session. Tough. It's tough. It really is. So we're looking at this monthly, these ranges, not really big. We'll look at a different time frame here in a second, a shorter one. The spike high, definitely have that on your radar, 161.95, 162. To the top side potentially as a big-time resistance zone. Getting our way back machine. You can see we're in rarefied air right now. So a heck of a debate whether we believe that this may be a top or maybe we're going to launch through it. The dollar was, in my view, was sort of dead. And I was a big bear with the U.S. dollar as we rolled into this year. And now you sort of have to be bullish because of the war and the capitulation. People are selling metals. They're piling into dollars. They're buying bonds. It's really fascinating to watch. And it's all really changed sentiment just over the course of the last 3 weeks. In any case, get your way back machine and spot that level. That's huge, 161.95. So it's right up in that zone. So be sure to dial that in just right from this spike high. So if that's going to be key, are we bullish or bearish right now? Neither. For me, neither. The long-term uptrend is definitely intact, but we're talking about going back several years where we've just sort of milled around this zone, 140 to 160. We haven't made another big leg up. So, I'd probably be playing rotation, maybe looking to take some shorts right up from that key zone. I think that could be pretty good. But for right this minute, what could we do? I guess I could say we're modestly bullish, maybe. This is a pretty good 6-week range. So you've got a nice low, a nice high there. So potentially something like this. Spike low to a spike high. Very, very tight week last week, not a big one. And then right there, 157-ish, potentially about 150 pips down. You would really like to maybe get this one next week when that 13-week EMA comes right up into here. But a pretty good little level there. So I'd be looking at 157 as being potential downside support. You also have a 13-week EMA at 156.67. That's a pretty big level. For right this minute, you can see the formation that we have on our Japanese yen weekly. We've got a nice big break right here. You're sort of directional. You're looking to buy pullbacks when you're moving bullish week over week. Now you had that flat sort of dead week. Now we're trading inside of last week's range. Yeah, I would like to buy a pullback. I'm not really interested in taking a short just yet, just because the U.S. dollar has been stronger, and that's been sort of a byproduct of your war in the Persian Gulf. No question about it. So that'd be a pretty good level there for the U.S. dollar, Japanese yen. You can check that one out. And the other one was the Australian dollar, New Zealand dollar. $122.50 up there. We were watching that at one point, right? I don't think we have to worry about that. So what you have here is just a big correction. Bottom lines, you got a correction going. This would be one of those charts where you would be looking at the trend lines, and you say, okay, Shane, what does that mean? Well, let me take a look at what you had here. Sort of maybe from that bottom on this daily, this bottom that was back in February. You can see sort of a rally pulled back to that trend line, defending it. So there would be your first touch. There's your second and your third. The third touch is always a big deal because right there when the rubber hits the road, is this going to be support or resistance? It was support. Nice big rally, and now we've broken. So is it too late to be short? I wouldn't go short. I would probably wait for a pullback, maybe up into here somewhere, this trend line, but that is a big deal. Today's close, you can see we were right down there on Friday, and now the big bearish close. That's going to sort of suggest that this market is going to be headed lower over the near term. It really does. So you could approach it that way, but would you sell right here on the day's close? I don't know that you need to do that. You might be able to wait a day or two and get sells up in here, but the game has definitely changed. The game has definitely changed here. When that trend line broke on the daily, boom, you could see exactly what happened. So for me, I would either be looking potentially to short on a pullback here. One way to do that would be grabbing a Fibonacci that maybe coincides with that zone, which is right around that 120.50 level. Maybe something right up here, 120.25. That might be a great sell in concert with that trend line break. So just to sort of stress, what I was saying, like that, somewhere in there. So your pullback, you don't have to sell right away. You got time, and if the market just breaks and runs, then it breaks and runs. But if you get a pullback right up in here, that's not a bad trade because we've already seen the trend lines broken on the daily. Okay, so your trend line's shattered. That suggests that trend line reversal strategy we put out there on the How to Trade YouTube channel seemingly years ago, nobody watched it. Trend line reversals are a big deal. You see them all over YouTube. Everybody's making millions doing it right. Well, it's not that easy. But when you have the weakness in this market that you're seeing the Kiwi all of a sudden beating up on the Aussie, and the reason why is the gold market's fallen out of bed. That's definitely hurt the Australian dollar in a big way. Maybe this one goes a lot lower. Maybe. Take a look at that, though. As far as a trade, how would you manage it? Well, it'd be pretty easy. You just wait for a pullback maybe somewhere up into this zone. Stop out point you could put there, or you could put just as a daily close above your trend line. If the market reverses and closes above the trend line, you could get out there. You don't have to have a static stop loss. A lot of options on that one. But right now, you could see that the long-term trend, I could pull long-term Fibonacci's. We don't need to do it. You can see that this long-term trend is still relatively bullish. But the game has changed. When that trend line broke, now we're starting to look at the bottom side of that market. Interesting stuff. Metals are definitely a drag on the Aussie right now. The metals are coming off big, and that's hurting the Australian dollars. That's for sure. All right, everybody, I think I'm going to go ahead and sign off for right now. Have a fantastic trading day. Tomorrow, we're going to be back with a strategy session, stocks, Forex, metals market scan. Feel free to head on over to howtotrade.com. You can go ahead and get a free account there. Sign up, pop in, send me a private message, say hi. We've got a bunch of Academy videos, a lot of educational content in there that could teach you an awful lot if you're so inclined. Many different mentors or trading coaches have worked at How to Trade over the years, and all that content is still right there in the trading room. So if you're getting tired of listening to me or seeing me smile and laugh and wave my hands around, then check out some of those other videos. They're definitely there for you. As far as what to expect later today, I do not know. I genuinely do not know. And remember that in trading, we don't have to know to make money. You don't have to know what's going to happen to make money. It helps, but if you don't know, just stick to your guns. Biggest key from today's session is the news. It's wildly unpredictable. The volatility is incredible. Probably the biggest lesson from this live stream was that loser in gold. Why did it lose? Crazy news cycle, crazy volatility, bad timing, and also my profit target. I was looking for too much. If I'd have stuck to the 15, the $10 to $15 scalp there, it's money in the bank. You're in and out in 3 minutes. Food for thought. We'll see what happens. Also, keep an eye on that gold market. It is rallying right now. We're at 44.28, 44.26 on the spot, 44.28 on the futures market. It looks like that hammer formation. I can't resist. Let's pull it up here daily. That hammer formation is starting to set up. Key long-term support zone. If you get that close right up in this area, maybe a bullish close, maybe right up around 140, 44.35-ish, somewhere in there, that's a hammer. Now, you don't just buy it because it's a hammer, but once we break above that high potentially, then we're starting to talk about accumulation. Fascinating stuff that's going on right now in the metals market, no question. All right, everybody, I'm going to go ahead and sign off. Let me see. 512 Eli, peace or no peace? Well, we've all got our fingers crossed. We're looking for peace. They say it's going to be done this week. I don't know. Markets don't know either. But right now, bullish sentiment, a lot of optimism out there. We'll wait and see exactly what happens in our news cycle. Absolutely, Naomi, you're welcome. You have a great day, too. You guys have a fantastic trading session. And as always, trade the action well, and we'll talk soon. See you.